Bloomberg reported late yesterday that senior executives at AT&T and Time Warner have been talking about ways they might just get those two companies together, up to and including a merger. It would be a big media deal, and it comes on the heels of another telephone company moving into content, with Verizon having bought AOL and then agreeing to buy Yahoo. To help us understand what's going on with telco and content, we're joined by Craig Moffett. He's founder and senior research analyst at Moffettnathanson. Welcome, Craig. It's good to have you here.
My pleasure. Good to be back.
First of all, to set the stage, we have a bar chart showing the relative size in terms of market cap of AT&T and Time Warner. And Time Warner is a media giant in the media world. It's not nearly as large as AT&T. AT&T is a much bigger company.
A much bigger company by all dimensions, by balance sheet, by revenues. So yeah, it's a huge, huge enterprise.
So why strategically, if they were to want to get together, why would they want to do it? What does AT&T need from Time Warner that it doesn't have?
Well, look, you mentioned that Verizon is pursuing media in its quite different way as well. And what both of them are struggling with is the core wireless business has gone ex-growth for both companies. The wireline business was already ex-growth. AT&T has started to move, recall buying DirecTV, has started to move toward an entertainment platform. Remember, DirecTV is a distribution company, though, not a content company.
And to stretch it a little bit, you go back a little bit when Comcast bought NBC. They were doing something like this coming from cable.
Absolutely, combining content and distribution. Now, there's a big difference in that Comcast bought at the bottom of the cycle. Remember, they were buying in 2009, right at the bottom of the trough, and now AT&T is buying after a long recovery, and so the valuations are quite different in the two situations.
So AT&T might well be interested in content. It makes sense. How doable is this deal, though?
Count me as pretty skeptical, right? It's very hard for AT&T's balance sheet to expand to this size. So if you glance at AT&T's balance sheet on paper, although the numbers are eye-popping with, what, 120 some odd billion dollars of debt, in fact, that's actually quite understated.
We have actually a bar chart of long-term debt, actually, it will show.
And in fact, there are about, we'll see the bar chart in a moment, but there are another.
There we go. And AT&T is that T way out on the right. You see how big it is. Verizon is the next one over. Well, then it goes down to GM on the left.
Well, add probably roughly $80 billion to that number to get to the actual.
And why doesn't
that
load show up on the balance sheet?
Three reasons. One is, the biggest one is, remember that FASB, the accounting organization, right, is going to start counting operating leases as debt starting in 2019. S&P and Moody's have already moved in that direction and started counting that as debt. You have all of these telecom companies have enormous operating leases associated with their wireless towers.
Sure.
So you've got, then add to that your pension, unfunded pension costs, and your unfunded OPEB, or post-retirement health care, right, and there's another $80 billion. You've got $200 billion of debt, which takes their leverage up to about 3.5 times.
So take a step back a little bit. Let's assume that this is a difficult deal to do. Time Warner has been paring down and paring down, and people have been saying it is much more of a target now for a possible acquisition than it had been. Does this, in some sense, put Time Warner a little bit in play?
Sure.
For other people to say, let's go kick the tires and see if there's something there for us?
Absolutely, and I don't think that's a mistake. I think we don't know who leaked the story yesterday, but it's not crazy to think that Time Warner is effectively sort of getting the ball rolling with a process that would smoke other bidders out, to whether it's Comcast might say. I think Comcast would be unlikely to start this ball rolling for regulatory reasons, but they might find it hard to resist to step in.
Or 21st Century Fox.
And Fox, and remember, Fox was there. The reason that Jeff Bewkes didn't want to sell last time, arguably, is because he wanted to wait until Comcast and AT&T were ready to be counterbidders.